AI, as it currently is not going to give you the return. The future, I think it can, but I think our brains are are constraining us. I think we can't think about how it's going to work. That's why I rely on Jensen Huang, CEO of NVIDIA, so much, because at least he has a vision of how it can be used. Right now, I think it's kind of super Google. It's got to be more than that soon.
Yeah, you know, Jim, I wanted to come to Jensen Huang because, of course, we continue to sort of try and understand that $100 billion investment, and I put quotes around it, that was announced earlier this week. We got, obviously, some details when John Ford sat down with Jensen and Sam Altman and Greg Brockman. And we've gotten a little more, although, frankly, still trying to fully understand exactly how it all works. But Jensen was a guest on the BG2 podcast, our friends Brad Gerstner, Bill Gurley, and he did give, I guess, a bit more sense as to how they're thinking about the opportunity at OpenAI and how they're thinking about that investment. Take a listen.
I think that OpenAI is likely going to be the next multi-trillion-dollar hyperscale company. Okay. I think you and I.
Why do you call it a hyperscale company?
Hyperscale, like Meta's a hyperscale. Yeah. Google's a hyperscale. Yeah. They're going to have consumer and enterprise services, and they are very likely going to be the world's next multi-trillion-dollar hyperscale company. Yes. And I think you would agree with that.
I agree.
If that's the case, the opportunity to invest before they get there, this is some of the smartest investments we can possibly imagine. And you got to invest in things you know.
Right.
And it turns out we happen to know the space. Mm-hmm. And so the opportunity to invest in that, the return on that money is going to be fantastic.
OpenAI going to be the next multi-trillion-dollar hyperscale company. Obviously, its last round, roughly, at least, employees sold it roughly $500 billion value. But we've still been trying, Jim, to make sense of the $100 billion. What does it come in at in terms of valuation? When is it actually funded? Is it all equity? It certainly sounds judging from Jensen's comments that it will be, although it will be over time. It won't all be at any one time. I guess the most important thing is the two of them said they're going to build 10 gigawatts of capacity, namely data center capacity, together. And that gives confidence to the entire ecosystem. What's your take?
Well, look, I think that the details are amorphous. How about that? But I do remember when Jensen came in all in and bought a ton of CoreWeave on the IPO. We know that's about 40, and it turned out to be something that a lot of people felt, well, he's just doing it to prop it up. It was just the opposite. He understood that CoreWeave could be amazing. I know there's still a lot of doubters CoreWeave because of the debt they use, and they feel like Michael Intrater doesn't necessarily have a handle on it. I disagree with that. But I think if you can get in at a good price, Jensen's going to be right. Now, does everyone need $100 billion? No, that company does, because that company, David, is the only one that is going beyond its cash flow. I don't like that, because I've liked this whole move so far. It's been done by cash flow. This is the first one that hasn't been. But if it's done by an equity investment, and for at least in part by Jensen, I think Jensen's right. He knows the company. He's a very shrewd investor, by the way. Almost everything he's invested in for NVIDIA has really paid off.
Yeah, I mean, again, the $100 billion, that's what's amazing about all this, Carlos. It's just a drop in the bucket. Whatever over time period it occurs.
Yes.
Sam Altman has said trillions of dollars, and he's meant it. And he's traveled the world to try and find access to that capital, both in equity and obviously debt financing, private credit playing such an important role. Again, it gets back to the conversation that we've had even more often at this desk this week, and that certainly is the subject of the Wall Street Journal story today, just because the numbers, again, are just stunning.
Well, not to mention...
Okay, Dave, I haven't read a positive article about the spin. Not one. Everybody's doing, particularly the people who are hedge funds. They know more than Zuckerberg, I guess, and they certainly know more than Satya, and they've got to be knowing more than Jensen. It's impossible that they don't know more than the people at OpenAI. Here's what I feel like. I feel like that every time I read an article, it's about somebody who doesn't really know what they're doing, saying there's too much money being spent by people who know what they're doing. I mean, I think I think Satya's an amazing investor. Zuckerberg's incredible. Now you can say, wait a second.
They think if you build it, they will come, I suppose, Jim.
Well,
I think that's true. And
that was Pat Gelsinger's.
None of them know what's coming with AI in the sense of we still can have a debate as to whether it's going to ultimately kill us all. I mean, that's a actual reasonable thing to still want to discuss.
Kill us all.
Yeah. Remember Sam Altman? He used to be 10 to 15%. Elon Musk. I don't know where Dario Modi is at Anthropic. Those percentage numbers, some of them are still up there. So they can't completely tell us what's going to happen as a result of everything they build.
I'll give you one. I wish Amazon would spend more money, because I don't want Amazon, it's a big position for my travel trust. I want Amazon Web Services to be the absolute best. Now, maybe they have everything they need, but when we look at these, that stock is the one that's the worst performer in the mega caps. Well, I think it's because people perceive them as not spending enough. I think they're an amazing company. I think Jassy is another guy. I'm not going to bet against these people. Betting against these people is a sucker's game. Look what they've accomplished.
Maybe Jassy is making more rational thoughts than some of his other competitors. They're designing their own chips. Maybe ultimately he's sort of a little, just made a tiny bit more concerned, saying, well, I'm going to be there to spend, but I'm not, I want to make sure my dollars ultimately get a return.
Well, I think that he's being prudent. And I think a lot of other people think that Sam Altman's being reckless. I think Sam Altman has said over and over again, look at the demand curve. Look at what people want. We have to meet the demand. So then the question is, what are they meeting their demand? Well, there's a really good piece out this morning about Microsoft, and it's really talking about, look, if you bring them in, you're going to save money. If you bring in Copilot, I don't know. See, Copilot, I don't use Copilot, but I was, even for my segment for today's show, I was on Perplexity a couple times. I was on Grok a couple times. I was on ChatGPT probably 5 times. I have Johnson & Johnson CEO today. I had to go analyze all their big drugs. Well, I can't do it myself. So what I do is I just put them through through that prism, so I know more about Tremfya. I need to know more about these different drugs in order to be able to have a serious conversation with that man, with Joaquin, who is brilliant, and he doesn't suffer fools gladly. I'm sure he absolutely wants me to know what these big drugs do, particularly on the multiple myeloma, which is an incredible drug, and on bladder cancer. And if you don't know what they do, he's just going to say, what a fraud. So you do your homework. And the way you do your homework these days is to go to those chat bots.
We did have Ken Griffin on our air yesterday talking to Sarah in Miami. He did say that we're in the throes of some echoes of the dot-com boom. I see Einhorn today, Jim, on the tape. The numbers being thrown around are so extreme, it's really, really hard to understand them. There's a reasonable chance that a tremendous amount of capital destruction is going to come through this cycle. But I guess we just sort of set those aside.
Well, I was trying to get from Renee Haas from ARM Holdings this week, or in some degree from Sanjay Mehrotra from Micron, is it a winner take all, loser take none? So let's say if I were running one of these companies, I would be calling Tim Cook in Japan. I would say, you know what, Tim, I want, like you have with Google, I want to be built in as the one. I'm Claude. I'm not getting any traction. I'll give you $50 billion a year if you let me be your default chatbot. And how brilliant is that for Apple? But that is probably a very realistic thing that could occur.
Welcome back. Trump administration reportedly considering a plan to pressure chip companies to continue to boost their domestic manufacturing. Wall Street Journal reporting that the policy would impose a tariff on companies whose customers import more semiconductors than they make in the U.S. Joining us now is More Insights and Strategy CEO, chief analyst as well. You got a lot of jobs there. Patrick Moorhead. Patrick, always good to have you. I guess let's start off on that. Again, it's not something that's going to happen right away, but it's being discussed by the Commerce Secretary, apparently, according to reporting. Makes things even more, perhaps, confusing. What's your take?
Yeah, so the administration is definitely floating this to everybody, and you can imagine the response from the chip makers, which is, I don't want to change anything. And I think what this is this is a plan B or a plan C, depending on how you look at it. But given all the new CapEx commits for AI data centers, they're recognizing that they just don't have enough capacity here in the United States to de-risk the situation. And it is a huge risk. TSMC isn't even bringing their best technology to the United States first. It's bringing it into Taiwan. And even if you look at the amount of capacity that TSMC is bringing in, it definitely makes a big opportunity for Intel, though. I think that is the one potential winner in all of this.
Yeah, I mean, again, right to your point, it's something worth reminding. NVIDIA designs the chips here for the most part, but the highest end chips are manufactured by Taiwan Semi in Taiwan, the ones that go in all the data centers that are going to power the AI revolution here. Let's talk a bit about NVIDIA, though. We've still been trying to make sense of the $100 billion number that they announced with OpenAI. I had some sound earlier on the show from Jensen Huang and the latest podcast that he joined. But, what is your overall take in terms of their position right now and where things stand in terms of this overall spend?
So vendor financing is nothing new. Retailers and manufacturers do it every day, but what they don't do is do long-term and hundreds and billions of dollars. And NVIDIA also made a similar move, albeit with the smaller neoclouds, the CoreWeaves, the Nebulouses, and the Lambdas of the world. I feel very comfortable with the overall spend for the next 2 years. It gets a little cloudy when you get out to, let's say, year 3 or 4. There is downstream benefit, but not that mirrors the capital expenditures out there, right? We've seen some great action with Meta using AI to increase their profit. We've seen some, I'll call them green shoots with companies like Adobe, not big, but in the billions of dollars. And we need to start seeing that convert. OpenAI is looking at a $125 billion revenue target for 29, but that means they have to 10x it from where they are today. So there is risk, but I think we are good for the next 18 months or 2 years here.
Patrick spoke yesterday with Citadel founder and CEO Ken Griffin about a lot of the administration's policies, but one of them that came up where he had some strong views was on semiconductors. And just listen to what he said about NVIDIA and how the administration is approaching the issue.
I'd much rather have them use American chips than Huawei become a real competitor. 100%. I'd rather see NVIDIA chips used by every country in the world than to see Huawei take South America, Africa, and Asia with it. I want to see American businesses win.
Well, that has been what the administration is trying to do, right? That's why they lifted some of the export controls on chips.
Well, then they turned around and said, you're going to pay a special payment to DC to sell the chips. And look where we are today.
Patrick, first of all, is the administration doing that? And what do you make of some of the comments? Does it change the investment case for NVIDIA if it's not just about the innovation and it is about sort of the national champion aspect and negotiating with the government?
So I do agree with Ken that we should be exporting more AI technology and just not the leading edge technology. So the Chinese PLA couldn't use it for nefarious purposes against us and our allies abroad. But what that does mean, though, is we should not be holding up H20 and the NVIDIA Blackwell follow-on from that. These are detuned. They're higher performance, higher density than anything Huawei can do. And it is, I think, even good for economy, but good for national defense to have everybody on American technology versus Huawei technology. We saw this get out of control in telecom, right? It used to be Cisco, and then there are reports that Huawei stole intellectual property from Cisco, built this incredible juggernaut of a networking company, and now is out there in over half of the world. I could see us repeating this unless we make our technology better. And from an investment thesis, yes, China is this growing even on a percentage basis more than the United States in certain areas. And it would be a loss for NVIDIA and other American design companies to not participate in this trade.
And today's news is really the U.S. government is considering imposing a 100% tariff on imported chips that exceed what a fab produces domestically. So you import one, you got to make one here. And that's why you're seeing Intel closing 4% higher. And that's also why the world's third largest contract chip maker, Global Foundries, closed 8% higher, given it does have significant U.S. capacity and could benefit from this new policy. Taiwan Semi was down about 1%, though large fabless players like NVIDIA, Broadcom, Marvell would likely redirect more orders to TSMC's U.S. facilities in Arizona, so that could be a positive. Tower Semiconductor closing roughly, it turned in the green, so let's say it's flat. It's an Israeli specialty foundry that has 2 fabs in the U.S. and could potentially ramp up production for U.S. customers, as could analog chip makers like Analog Devices, Microchip, Texas Instruments, which is why Texas is up over or closed over 1% higher. But the problem is execution would be very complex. Most chips are imported embedded in finished systems like servers and laptops. And so this would force system manufacturers like Dell, Supermicro, HP to really track semiconductor origins across their entire supply chain, which could be seen as a logistical nightmare. All of those names closing in the red. Bottom line, expanding U.S. manufacturing or promising to do so appears like the way forward.
I've never advocated the negative position, the bubble, recklessness, so the so-called foolish spending, partially out of respect to the leaders of the so-called hyperscalers, the trillion-dollar companies that are spending fortunes building out their AI data center networks because they think that that's where the opportunity is. I will not call it a bubble because I trust the judgment of Jensen Huang. He's the CEO of NVIDIA, who's arguably the father of both accelerated computing, which does matter tremendously, it's not talked about, and generative AI. Jensen's been met with skepticism every step of the way, and the skeptics never seem to learn, even as he constantly proves them wrong. And I think he's doing so again. Even though the data center spend is admittedly humongous, you got to keep in mind that it's coming, for the most part, from the vast cash flow of the richest companies on earth. They're not borrowing money. Lately, though, some build-out plans announced by Sam Altman's OpenAI and Oracle, founded by Larry Ellison, now with 2 CEOs, have caused some trepidation because they're spending well in excess of what they can afford. Now, I've got to tell you, I actually am uncomfortable with that. But again, when I hear Sam Altman talking on our network in a great interview with John Ford about the demand that he has, when I know NVIDIA's roadmap for a reasoning semiconductor platform, one that can comprehend and actually help your advanced thinking, okay, and maybe be ahead of you with complex problems, I have to suspend a guilty verdict, or at least I intend for Mad Money to stay open-minded. So don't call me a cheerleader. But I believe that AI is getting better and better and better and will be worth every penny when things shake out because Jensen Huang has assured me, and I have no reason not to trust him. Plus, unlike the dot-com era internet build-out, which was often financed by vendors, it's called vendor financing, or lightly financed by shaky institutions, the data center build-out is largely funded by the smartest people on Earth who are running the richest companies on Earth. The CEOs of these companies believe AI will be the next industrial revolution, and they know. I, for one, am not smart enough to doubt them. I own that. I don't have that. They've made us too much money, though, to think that they've all lost their minds. Of course, not everybody's going to win. Could there be more than one winner? It's something I was working on all this week when I talked to those CEOs. When the dot-com con imploded, we still did get Amazon and Google, though Google came public years after the bubble burst. Maybe we can get 3 or 4 winners this time around. That wouldn't shock me. But they all want to win the race for the best AI because they're terrified they'll be left behind and they'll never be able to catch up. And you know what? They won't. So when you hear these critics warn of a disastrous bubble, keep in mind that even though many of these bearish money managers who come on TV and talk their negative book are smart, they don't know jack about tech versus Mark Zuckerberg, Satya Nadella, Andy Jassy, Elon Musk, and they can't hold a candle to Jensen Huang.
All right, I hope you're all doing well today and staying calm in this market. We have multiple pieces of NVIDIA news to cover, but really quick, I want to address what happened to IREN today because it's very important. As many of you know, I've been talking about IREN a lot in recent videos, and I'm bullish on the stock over the next 1 to 2 years. The stock was down notably today, down double digits % at the lows. I think this is partially due to some NVIDIA news that broke today, which I'll address in a moment. But the bigger reason that IREN was down today was an analyst downgrade of the stock. I have some issues with the analysis, and I'm very briefly going to address those. It's also worth noting that the analyst that downgraded IREN today already had a price target that was substantially below consensus estimates, which is worth bearing in mind. The analyst thinks the share price is factoring in a 1 gigawatt colocation deal, and he thinks such a deal could cost over $10 billion in capex. The analyst believes that this is possible over time, but thinks the stock is overvalued in the short term. The analyst is essentially hitting on 2 separate questions. Will IREN be able to deliver on their expansion plans, and will IREN secure client contracts for the capacity they build? I think the answer to both of these questions is likely yes. We know that IREN will be able to access the capital they need to execute on their expansion plans, as company leadership had discussed previously. IREN is able to lease 100% of GPU costs at attractive single-digit interest rates, and they don't see any need to do an at-the-market offering. That's one of the things I like about IREN. They're primarily funding their AI expansion through non-dilutive financing, which is great for shareholders. And IREN is able to get a 2-year payback on the leasing from the GPUs and a 3-year payback if you include infrastructure. IREN leadership have said they're able to access additional lease financing as they scale. And so access to capital is not a roadblock for IREN. I also expect IREN to deliver on their plans given their track record of previously delivering on plans when they were primarily a miner. And now let's address the second issue. Will IREN have customers for the capacity they're building? IREN leadership addressed this issue issue head-on on the company's most recent earnings call, saying that clients want compute and they want it immediately. They don't want to wait 2 or 3 years for that capacity to be built out. That's why IREN is building out capacity even before securing contracts. They know the demand is there and the customers want readily available compute. And so the better question to be asking on this topic is, will the world still be majorly compute constrained when IREN's new capacity comes online? The answer to that question is almost certainly yes. I could point to a long list of reasons why, but for the sake of time, I'll briefly mention a couple. Jensen just appeared on the BG Square podcast saying that the world will continue to be compute constrained for at least a few years because we have 2 exponential curves of growth, the exponential growth of AI usage and the exponential growth of AI's improvement. Both of these growth curves are compounding the need for more compute, and he expects the extreme demand for compute to continue for at least the next few years. Also look at Microsoft and Amazon. They told us this past earnings season that they collectively have hundreds of billions of dollars worth of backlog that they have to deliver to their paying customers, meaning they're severely supply constrained and investing heavily to try and meet extremely strong demand from their paying customers. Additionally, Microsoft CEO said about 6 months ago that he's looking forward to leasing capacity from other companies even into 2027 and 2028 to try and meet demand. And so I ask, will the world still be compute constrained when much of IREN's new capacity comes online? The answer is almost certainly yes, and therefore IREN should have no problem attracting customers for the capacity they are building. Also remember that IREN is now an NVIDIA preferred partner, which means they will have the latest NVIDIA products early cycle when demand for those products is extremely strong. All of that to say that IREN is able to access the capital they need. They have a track record of executing on their plans, and they should have no problem securing contract from customers. I think today's downgrade of IREN and the subsequent downward price action was an overreaction. The fundamental story remains unchanged. I continue to be bullish on IREN over the next 1 to 2 years, and today's price action does not change that view at all. I don't know what the stock will do in the short term, but I am bullish on IREN for the next 1 to 2 years. Now let's cover today's NVIDIA news. As I mentioned, Jensen just appeared again on the BG Square podcast. I'm still going through this episode, but a few points that have stuck out to me after watching the first 30 minutes or so are that Jensen does not think we will hit a glut in compute demand for at least a few years. The OpenAI investment was purely an opportunistic investment from NVIDIA's point of view, and OpenAI is not required to purchase NVIDIA's hardware. NVIDIA simply invested in OpenAI because they expect to get a very nice return on that capital. And Jensen said that a year ago, he drastically underestimated the need for more compute, meaning that the world is still majorly compute constrained as we see both AI usage and AI quality increase, both leading to greater demand for NVIDIA's products. I still have to watch the rest of the episode, but those are some things that have stuck out to me so far. In other news, the Wall Street Journal is reporting that the administration is considering a new rule that would require semiconductor companies to maintain a 1-to-1 ratio of chips they import and chips that are domestically produced in the US. Failure to abide by the rule would result in additional tariffs. According to the report, this rule is still speculative, but if implemented, there could be an exemption similar to the current semiconductor tariff exemption. Currently, companies are exempt from the 100% semiconductor tariff if they have committed to investing in US-based manufacturing. It appears that this new 1-to-1 ratio rule could also have an exemption wherein companies would be exempt from the new tariffs if they pledge to purchase the proportional amount of US-produced semiconductors. This rule would of course benefit Intel and would likely result in a large increase in orders at TSMC's Arizona plant. Keep in mind that this new rule is still speculative as far as we know, but we will see what happens. Over the medium term, there are multiple things to look forward to. We have revenue growth acceleration based on NVIDIA's Q3 guidance, thanks largely to the fast production ramp of Blackwell Ultra. We have GTC in Washington, D.C. with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI deals with the U.S. government or large-scale projects with U.S. companies that may be announced during that keynote. And we also have what I think will be a surge in compute demand fueled by agentic AI that I think will extend well into 2026. I understand that the stock hasn't done much over the past month or so, but it's important to keep in mind that we have multiple positive factors over the medium term, as well as many more over the long term. Time and time again, the market has worried about whether there will be an overbuild of capacity, only to later find out that much more compute is needed than what was originally expected. This is due to 2 factors: new use case development and an increase in public adoption of the technology. I think we will see AI demand increase a lot over the next 5 years. I also think we will see many more use cases developed over that time, leading to even greater demand for compute. I've mentioned in recent videos that NVIDIA has multiple large growth opportunities on the horizon, including sovereign AI, enterprise AI, AI native startups, physical AI, and quantum computing. Just focusing on physical AI for a moment, I think we will see a massive number of new use cases developed in this emerging industry, which will almost certainly lead to greater demand for compute. Whenever we hear analysts or market commentators worried about an overbuild of capacity, we need to remember that the wave of physical AI largely hasn't even started yet. I don't think people have any idea what's coming over the next 5 years from this industry, and I don't think people have any idea the massive impact this industry is going to have on demand for NVIDIA's products. NVIDIA is establishing themselves as the underlying foundation of physical AI in three major areas: providing the hardware in the data centers where the models are trained, providing NVIDIA Omniverse where the models are taught and tested, and providing the hardware that allows on-device real-time inference through NVIDIA GX. This is going to be a massive area of growth for NVIDIA in the coming years, and I seriously think that NVIDIA's physical AI business may eventually be larger than their current data center business. I don't think most analysts are adequately factoring this into their long-term projections. So to summarize, here is the situation. AI demand is extremely strong and continues to grow. The world is massively compute constrained as there is simply not enough supply to satisfy the demand. And new use cases continue to be developed that will almost certainly increase the need for even more compute. And NVIDIA is positioned extremely well to capitalize on this demand over the coming years. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.